Well, good morning, ladies and gentlemen, or afternoon, wherever you happen to be in our fine country. Hey, my name is Mark Mayers. I'm here in Southern California at the offices of the Jesus Film Project in Laguna Niguel, California. We are going to start our webinar in just 10 minutes. I wanted to give you a 10-minute heads up. We will start the webinar in just 10 minutes. Thanks for logging on. We'll see you in a couple. Yeah. Well, good morning, ladies and gentlemen. My name is Mark Mayers here at the Jesus Film Project offices in Laguna Niguel, California. Welcome to our webinar. Hey, I just wanted to give you a 5-minute lead time. We're going to start our webinar in just 5 minutes. Just wanted to give you a heads up. We'll see you in just a couple minutes. Thank you for logging on. Well, good morning or afternoon, ladies and gentlemen, wherever you happen to be in our fine country. On behalf of the Wycliffe Foundation and the Jesus Film Project, Welcome and thank you for joining the fifth in our series of webinars on topics related to gift and estate design. My name is Mark Mayers, and I serve as a regional representative in the Fund Development Office of the Jesus Film Project here in Southern California. I'm going to serve as your moderator for the next hour. Perhaps some of you are watching today. You've taken part in some of our last webinars. Well, welcome back. Today's session is called Appreciated Assets, Your Key to Leveraging Tax Dollars for Greater Impact in the Kingdom. By the way, if you missed any of our previous 4 webinars, the recordings of that content are available at the link you'll see on your screen even now. The presentation today comes to you through a joint partnership of the Wycliffe Foundation and the Jesus Film Project, a ministry of Campus Crusade for Christ. Wycliffe and JFP have worked together for many, many years in the area of language translation, but now we're teaming up in the area of gift and estate design. By the way, also joining us today are friends from other Campus Crusade for Christ ministries like Athletes in Action and the International School Project. Other Wycliffe family ministries that are joining us today are the Seed Company, JARS, and the Graduate Institute of Linguistics. Through the power of web technology, our presenters are going to share with you the essentials that can help you preserve your estate, provide more for those you love, and advance the ministries and organizations you care about most. A number of past webinar participants have already taken advantage of this rare opportunity. Effective stewardship has been a result, and lives have been changed directly as a result of these webinars. During our webinar, you'll no doubt have questions for our experts. We will answer questions at the end of the presentation, which should be 25 or 30 minutes. During the session, you may submit your questions at that little text box down in the lower right-hand corner of your computer screen. If after our time together you'd like to share this presentation with others, or if for some reason you need to leave early, a recording of this content, this very content on today, will be available at the web address you're on now after October the 6th. Our presenters are here with me in Laguna Niguel, California today in the Jesus Film office. So let me introduce our gift and estate design experts. Michael Acapente is from Monument, Colorado. Michael has worked in the area of gift and estate design for over 27 years with organizations that include Campus Crusade for Christ and the Salvation Army. He is currently a gift planning advisor for the Wycliffe Foundation, which of course is one of the ministries of Wycliffe Bible translators. Michael studied business and economics at UCLA and holds a master's degree in taxation. Michael, welcome to the webinar.
Thanks, Mark, and welcome to all you folks who have joined us today. We trust you'll enjoy the time and it'll be well spent.
That's right. Gosh, I bet there's a bunch of people online right now who wish they had a master's in taxation about April or so. Also with us today is Jay Link from the suburbs of Grand Rapids, Michigan. He's also joining us here in our offices at the Jesus Film Project in Southern California. Jay has served in financial and philanthropic roles for a Fortune 1000 company for over 30 years. Since joining Crusade as a gift and estate planning consultant, Jay has used his expertise in accounting and in charitable giving to help ministry partners become the most effective stewards that they can be with the resources God has entrusted to them. Jay has an MBA and has earned the professional designations of Certified Public Accountant, Certified Management Accountant, and Certified Gift Planning Associate. Welcome to the webinar, Jay.
It's good to be here, Mark. Thank you so much. I look forward to serving our ministry partners this time.
Well, with all those certifications, we have a certified webinar going on right here, right now, ladies and gentlemen. Hey, both Jay and Michael have served literally hundreds of ministry partners for many, many years, decades, helping them leverage their current giving as well as deferred giving after their homegoing. So if your goal is to be the most effective, efficient steward you can be, then you're in the right place. Without further introduction, let me turn our presentation over to Jay. Jay?
Thanks, Mark. You know, the whole topic of appreciated assets that we're going to be covering today is it's part of a much bigger topic, and that's related.
We'll start off. We can just start over. Matt Thiessen just emailed.
Ladies and gentlemen, we're having some technical difficulties with Jay's sound, so the technical people in our room here now are taking a look at that, and we will be right back to the webinar. It should take only a minute or two for our highly skilled technical people. So hang in there, and we will be right back with the audio. I know you can see Jay, but I'm pretty sure you want to hear what he has to say. I've heard it a couple of times, and I am very impressed. So hang in there, and we will be back in just one moment with Jay's audio. Thank you.
Let's do this. Okay, can you hear me now? Is it coming through? Not yet. There's a delay on it. Keep that in mind. Yep, I'm talking and so they can hear me, so it looks like we're good to go. All right, should I hold this or can I set it down, or what would you like me to do?
Can you put that like mine under his little thing? See this?
Yeah, just turn it. Yep, I can do that. All right.
So, do you think we should start from the
I think we should start from the beginning.
Okay.
So we're only
from Jay's beginning?
Yeah, Jay's beginning. I'm going to just go ahead and reintroduce you.
Okay.
Technical
So
difficulties.
you go back to the first.
Okay, we'll just start the sequence over.
Okay.
Well,
Go back to slide, what's a steward?
we're just, yeah,
Okay.
go back to that. But let me just introduce you.
Mm-hmm. Okay.
Good. Are you guys ready?
Yeah.
Jim? No.
Your video stuff.
Okay, ladies and gentlemen, looks like we have the sound back. Thank you, Lord. We did pray for that. And Jay is ready to roll. We're going to start back at the first slide. Thanks so much for your patience this morning. Jay, why don't you take it from here?
Thank you, Mark, and thank you for your patience as we work through this technical difficulty. You know, the whole notion of appreciated assets that we're going to be talking about this morning is a part of a much bigger topic that it's important that we introduce, and that's the whole notion of biblical stewardship. And when we think about biblical stewardship, we're talking about what God would have us do with the things that He's entrusted to us, the resources that He's placed at our disposal. So I think it's important that we understand what is the definition for a steward. A definition that I've come across that I have found to be very helpful as I work with ministry partners is a steward is one who uses God-given abilities to manage God-owned properties to accomplish God-directed results. I mean, it's really all about the Lord. And there's a couple principles that I think are key as we think about biblical stewardship. And the first one is that God is the owner of all. Now, it's hard for us to really get our arms around that because we have title to assets. But from a spiritual perspective, leaving out the legal understanding of that, God is ultimately the owner of all that we have, and He simply placed that in our hands to use for His purposes. Secondly, planning, and when we think about planning, we're talking about gift and estate planning here, is that at its core, it's a spiritual process. I mean, we'll talk about interest rates and mortality tables and a variety of other legal and financial terms this morning, but at its core, it's a spiritual process. And then lastly, we'll talk about how we want to use God's gifts, both the intangible gifts that He's given us, and then also the material gifts that He's given us for His glory and honor. So with that as a backdrop, it kind of leads us to the question, how can you be a more effective and tax-wise steward? On this next slide, you'll see the things that we'll be talking about this morning in our presentation. First of all, we'll be looking at how you can make capital gains taxes optional. Then we'll be looking at how you can multiply the impact of your giving through appreciated assets. And another word that I like to use in addition to multiply is how you can leverage, how you can increase that in significant ways. The third thing that we want to cover is the whole notion of trading tax dollars for kingdom dollars to increase your charitable impact and build your legacy. And lastly, and probably most importantly, we're going to be looking at some cases of others who have used these tax-wise strategies in a successful way, and I believe you'll find that extremely helpful. And on that note, I'll turn it back to Michael.
Hey, thanks, Jay. Appreciate that. Jay mentioned the word taxes, and let's talk about that for a moment. Just like our road to salvation, there's bad news and there's good news. Well, let's talk about the bad news and the good news. Taxes. In our country, we face several layers of taxation, and we just want to mention this because it is going to be part of our discussion. And as Jay mentioned in one of his slides earlier, we're going to show you how you can take these tax dollars and transfer them into kingdom dollars. So, again, we all face income taxes, federal and state level, depending what state we live in. You can see the rates there. And in particular, we're focusing on today is the capital gain taxes. Again, for the federal tax levels, it's anywhere from 15 to 20%, depending on your level of income and amount of capital gains. And also, depending on the state in which you live, we face a capital gain tax of anywhere from 0 to 13% here in California. The national average is about 5%. And the last level of taxation, which is a fairly brand new one, is the Affordable Care Tax, or the Obamacare tax. So you can see, especially when it comes to appreciated assets, we're facing 5 levels of taxation potentially, and we're going to, again, discuss that in our case study. So that's the bad news. The good news is a couple of things here. First of all, a very famous, very well-quoted and articulate judge once said, anyone may arrange his affairs or her affairs that their taxes shall be as low as possible. It's not bound to choose a pattern that best pays the Treasury, and there's not even a patriotic duty to increase one's taxes. Over and over again, the courts have said that there's nothing sinister in arranging one's affairs to keep taxes as low as possible. Everyone does it, rich and poor alike, and all do right, for nobody owns any public duty to pay more than the law demands. To demand more in the name of morals, the surveyor can't. So, the bad news is we face taxes. The good news is many taxes are optional, and because we're talking about appreciated assets, the capital gains tax is a significant factor in that, but they are optional. You say, well, what do you mean optional? Either I have to pay them or I don't. Well, maybe not. Obviously, one option is to pay them to sell an appreciated asset, whether and Jay will talk about those in a moment, what types, and pay the tax and be done with it. Again, that tax can be anywhere from 20 to 40%. Some people will postpone the taxes, and the way that most people do that is through like-kind exchanges, 1031 exchanges. A lot of real estate investors do this, and that's really just delaying the tax. It's not really you're avoiding it. And there are only two ways to bypass or avoid the capital gain tax. One is death. Now, probably for most people in our audience listening today, that's not really the preferred option. And oh, by the way, if you pass away, it gets kicked into the estate tax system, which can be even higher. And the other way to make capital gain taxes is through charitable strategic giving. And as Jay referred to, using charitable giving strategies, which you'll see in a few moments, you can transfer those dollars that you can't keep, we're going to pay in taxes, to kingdom causes. Jay, let's talk about the assets that people use.
Thank you, Michael. There's a number of specific benefits that accrue to us when we gift appreciated assets. Number one, Michael talked about in his previous slide, where he mentioned that there's multiple layers of tax savings, both at the federal and state level, and income and capital gains taxes. So there's a variety of things that we're able to experience savings from when we use appreciated assets. Secondly, we can give substantially more from our assets versus just our cash flow. It's interesting. There's a statistic out there in philanthropic circles that says most folks that are giving, as much as they give, they're only giving from about 9% of their assets that they have at their disposal. And typically that 9% is coming from very liquid accounts. It could be savings, it could be cash accounts, or it could be their income flow. But there's another 91% of their assets that are illiquid, might be in retirement plans, could be in real estate, could be in securities, that most folks don't know how to give from those assets. And so we're talking today about how you can employ those for kingdom purposes. And then lastly is the whole notion that, again, that Michael referred to, and that is that we transfer tax dollars to kingdom dollars. Some of these strategies enable you to not only reduce your taxes, but eliminate them entirely. And so with that extra cash, then you have the option of choosing to use that to further kingdom purposes. On this next slide, you'll see some of the assets that we want to consider when we think about appreciated assets. So the first category would be securities. When we think about that, we think about mutual funds and stocks. The next one is real estate. We think about real estate, we would think about perhaps rental property, could be vacant land, could be farmland, could be commercial building that you use in your business. The third category would be the actual business interest that you might have, an S Corp, an LLC, or a limited partnership. And the last one would be, and we won't spend a lot of time talking about this morning, but we at least want to get it out there so that it gets in your memory, and that's the whole notion of artwork or collectibles. So when we think about collectibles, we're thinking about things like it could be jewelry, it could be precious metals, or things of that nature. On this next slide, you'll see that we want to make sure that you are able to learn from the experiences of others that have engaged these tax-wise strategies. So we're going to go through a number of case studies that I think you'll find extremely helpful. And I'm going to turn this over to Michael, who will walk us through a couple of those strategies to begin with. Michael?
Thanks, Jay. And as I go through these strategies as well as Jay, remember these are for illustrative purposes only. Most of them are based upon real people. We've just changed the names. But of course your situation may differ, but the idea is we want to give you the strategy, of course, as it applies to your own personal situation. Well, the first strategy we're going to talk about is just a real regular outright giving. An outright gift of an appreciated asset can give you what we call quintuple tax savings. No, that's not having 5 babies and getting more tax write-offs of those kids. We're going to talk about the tax savings from income and capital gain taxes. So let's illustrate this, comparing a cash gift to an appreciated asset gift. We have a couple, Rachel and Nick, own an appreciated asset worth $10,000. Let's say it's stock, for which they paid $4,000, and they're in a combined 40% federal tax bracket. If they were to make a gift of $10,000 to a project, say the Jesus Film Project or Bible Translation at Wycliffe, of cash, they would make a $10,000 contribution, get a $10,000 deduction, and probably save about $4,000 in taxes based upon their tax bracket. But if they instead decided or wanted to look at the option of gifting an appreciated asset, not only would they get the income tax deduction, there'd be additional tax benefits that would make the total tax savings of this gift much higher. Let's see how, looking at the next slide. So, instead of the cash gift, let's say they decide to get the $10,000 of securities. Well, they get the same income tax deduction on the federal and state level, saving about $4,000 in income taxes, but there are some additional tax savings. On the federal level, they also avoided about 20% capital gain taxes. They avoid the Affordable Care or Obamacare tax, and they also avoid the capital gain taxes on the state level. So we have 5 levels of tax savings here. And when you add it all up, it's over $5,700. Compare that to the tax savings of a cash gift, you can see the difference is $1,700, or for folks like percentages, that's a 43% increase economically to them for making a gift out of an appreciating asset versus a cash gift. So something to consider if you're thinking of making a significant gift to a ministry in which you want to support. Let's take this a step further. You may say, well, that's great, but maybe I want to support more than one ministry, and maybe it's not so simple as giving stock. I have an asset like real estate. Well, we're going to look at the case of Joe and Don Green, who faced this dilemma. And they're going to use something called a donor advice fund, which I'll explain in a wee bit more detail in a moment or two. So in Joe and Don's situation, they worked in real estate all their lives. They acquired a nice portfolio of rental properties over the years, and they decided, we want to give one of these properties to the Lord's work. We want to support our church and 2 other ministries that we really favor. They know if they sold the properties, they're going to face a capital gain tax there of 30%, and they thought, well, what can we do? How can we satisfy this goal of supporting more than one charity with a major asset such as real estate? Well, the solution that we suggested to them was establishing what we call the Green Family Fund, and use this vehicle called the Donor Advice Fund. And what they did is they established this fund and contributed the property to the charity managing the fund. That gave them an income tax deduction, as we saw previously with outright gift, based upon the market value of the property, plus they avoided all the capital gain taxes. And then once that property was sold, there was funds available, cash, in their donor advice fund, from which they could make grants to their church and the other ministries they were favoring. So you can see, using this vehicle, you can take a significant asset, something that's not easily divisible, real estate in this case, and make gifts to multiple ministries while avoiding taxes. Really briefly, let me explain how our donor advice fund works, and this is actually a previous seminar to which Mark referred to. Essentially, you establish a fund with a charity that sponsors them. I know both Wycliffe Foundation and the Great Commission Foundation have these, and it's really a simple 2- or 3-page application. That's what the Greens did, and once the fund was set up, they gifted the asset to the fund, and they received full benefits of the income tax deductions and avoiding capital gain taxes. And once the fund has cash in it, just like a private family foundation, only better in this case, they can make grants to as many charities they want. Again, the case of the Greens was their church and 2 other charities. So, again, a great tool to consider. And let's move on to the next case study. Let's take this another step further. You may say, you know, Michael, that sounds really good. I like this idea. But I don't want to give away the whole asset. I want to keep part of it. Or maybe I want to sell part of it. I need to get some cash out of this. How can we do that? Glad you asked. Another strategy some folks will employ is something called a gift and sale. I sometimes call it the zero tax gift and sale, and I'll show you what I mean by that. But in this case, we had a couple who owned farmland that was inherited from the parents many years ago. And when they received the land, the value actually was gifted to them, not inherited. They received the land and had a value of $100,000. Well, now it's grown to $500,000. And for you folks watching who live in farming communities, you know the price of acreage of farmland has gone up tremendously in the last several years. And now in this case, both of these folks, they live 1,500 miles away, so they really didn't want to manage the farm. They had a tenant, you know, who did the farming, but they decided, you know, we're getting lots of offers. Let's just sell it. Problem was, there's a high price tag at capital gains, which they weren't too thrilled about $120,000. And so we chatted with them, and they said, you know, we know we because of taxes we can't keep all of it, but Is there anything we can do to sell this land and not send all this money to the treasury? You know, we'd like to support the work of the Lord. Yes, there was. So the next slide just shows you really quickly, before we get to the strategy, it just shows kind of the tax numbers, how they flowed out. And again, you see that red number there, a loss of capital, $120,000, which they'd have to write a check to the federal treasury. And I don't know about you, but the last time I wrote a check to pay taxes, I couldn't put a designation. I wanted to be used for Bibles or Jesus films or feeding the hungry. It just, thank you very much for your check, and that was it. So we want to avoid that if we can. So here's a strategy that played out for this couple. We ran some numbers. We said, and both Jay and I have the software to do this, how much would you have to give away to charity in order to achieve what we call a zero tax effect? And so we ran the numbers and we said, listen, if you keep an undivided interest in this land of about $290,000, and if you gift an undivided interest of about $210,000 to charity, here's how the tax numbers work out. And together we'll sell this property together. You know, one property, two owners. Well, in the sale portion, there's still some capital gains that will be allocated to that, and the potential tax liability there was $69,000. But because they made a charitable gift of another undivided interest in the land to charity, the tax savings generated about $69,000 in tax savings. And essentially what we do, we take the tax savings and we use it to offset or zero out, so to speak, the capital gain taxes. The net result after the sale, and I'm not taking into account selling expenses here, is that they received about $290,000 tax-free. And the work of the kingdom received over $210,000. And I would add to this, with this plan, and I didn't illustrate it here, actually that charitable part went into that thing called a donor advised fund. And so now they're making grants out of their donor advised fund to several worthwhile ministries. So again, just up to this point, we want to show you that there are many ways to go about doing charitable gifting with appreciated assets, and it all depends upon your personal situation and dynamics and goals and whatnot. But these are just three ways to go about it. I'm going to pass this back over to Jay, who's going to share some more tax strategies to employ with appreciated assets. Jay?
Thank you, Michael. Those were great real-life illustrations, and I'd like to build on those with a couple more if I could. And the first one that I want to talk about is what we can do with what's called a charitable remainder trust. This is a specially designed trust that the IRS has set up that affords some particular charitable and tax advantages for us. So a charitable remainder trust, in this situation, we have John and Melinda, both 66. They recently retired. Now, they've always enjoyed giving to kingdom causes, and in their retirement, they would like to have some additional income over above what they would get from their retirement accounts and also from their Social Security so that they can travel more. 20 years ago, John and Melinda had purchased some stock in a publicly held company for $50,000. But recently, for whatever reason, the dividends in those stock have become quite negligible, and so they're concerned that they're not going to be able to get the income for retirement that they would like. And they've noticed that if they were to sell the stock, its current value is $200,000. So the question before us is there a way that John and Melinda can utilize the stock to generate additional income during retirement, avoid capital gains taxes, and help their favorite ministry? And yes, I think there is, if they look at transferring the stock into the charitable remainder trust. So on this next slide, you'll see it's a flow chart, and we'll walk through this fairly top level so that you can see how this concept works. So if you look at the rectangle on the left side, there you see their property. In this case, it's stock. It's valued at $200,000 at the cost basis of $50,000, and it has the gain of $150,000 that's hanging out there with it. They would take that stock that's valued at $200,000, they would transfer it into what's here called a 5% unit trust, which is another name for a charitable remainder trust. Now, when they do that, they accrue two different benefits. First of all, they bypass the taxes on the capital gain, and then number two, they get an income tax deduction for the value of that which they transfer into the trust that generates cash savings for them. So you can see they have some income there for their own discretion. And then we also have, if you look at the center rectangle, the unit trust. When that stock gets transferred into that, the trustee of the unit trust will sell that. That cash gets invested in a diversified portfolio, and then it pays out 5% of that value each year, which in this situation equates to $10,000 over their remaining lives. So in their retirement, they get over $250,000 of additional income. The last bonus of this kind of arrangement is, if you look at the rectangle on the right side, is that if the trust value at least earns what it pays out, and in this case that would be 5%, then the unit trust does not decrease in value, and at the end of the trust term it's available for going to their favorite charity without having to pass through probate. So you can see a number of very significant benefits of this strategy. Let's look at another one. This is a charitable remainder trust and sale, and this is fairly similar to the strategy that Michael talked about before, which was the gift and sale, or the zero tax gift and sale. So this is somewhat similar to that strategy as well. So here we have Don and Dolores. In the mid-90s, or 20 years ago, they inherited 20 acres of wooded land in northern Michigan that at the time was worth $30,000. They've kept the land for all these years, thinking that when they retire, they'd build a cottage on it, and they'd be able to spend time there with their 3 children and their grandchildren. Well, unfortunately, in recent years, their 3 children and their families have moved to warmer southern states, so building the cottage in northern Michigan no longer makes sense. So they're considering selling the land for its current market value, which is $150,000, and using the cash that comes from that transaction to buy an RV so that they can travel south and visit their family, but they can also have a balance that's available for retirement. So the question before us in this case is there a way for Don and Dolores to sell the land, avoid capital gains taxes, generate some cash now and for the future, and also help their favorite ministry? And yes, I think there is. If they transfer a portion of the asset in here, which is the land, to a charitable remainder trust, retain a portion, and then have the lands be sold. So let's look at the flow chart on this one. And again, we'll kind of look at this one top line so that you can kind of get the general gist as to how this works. So you can see in the left rectangle, the property has a value of $150,000, a basis of 30, so it has some gain on it of $120,000. So as we mentioned before, the strategy with this tool would be to transfer or retitle a portion of the land into the unit trust and retain a portion for themselves. And here you can see in those 2 center rectangles that the portion that they transfer into the unit trust is about $83,000. The portion that they retain is $66,000. Now again, keep in mind, as we talked about with the charitable remainder trust in the previous example, when they transfer into the unit trust, they accrue 2 benefits. First of all, they're able to avoid any capital gains tax on the capital gain, and they also get an income tax deduction for a portion of the value that they're transferring into the trust, which generates some cash savings for them. Now, also keep in mind, because they've retained a portion of that land in their own name, that when that land gets sold, the portion that they've retained, they will have some capital gains taxes on that. But if the transaction is structured appropriately, and we can help folks do that, the tax liability that they get on having the portion that they retain can be offset by the portion that they've donated to the unit trust. So it can be a zero tax situation, similar to what Michael had mentioned before. But the other bonus to this is, again, if you look at that center rectangle in the bottom, they have the unit trust that when it gets that $83,000 of cash when the land is sold, gets invested in a diversified portfolio. And again, over the remaining lives, they would get 5% of that value, which is about $4,200 a year. So over their retirement period, they get over $90,000 of additional cash. The last bonus, and probably the most important for those that are charitably minded, is if the trust earns at least the amount that it pays out of 5%, then the trust value remains intact, and at the end of the trust term, that value in the trust then is available to their favorite charity without having to go through probate. So again, you can see a tremendous strategy that can accomplish a variety of objectives for folks that want to generate some cash for now, they want to protect their retirement, they want to support their favorite ministry. Let's look at one more strategy. And this is what's called the Charitable Equity Partnership. And this is a fairly more recent strategy, and one that we at the Great Commission Foundation have begun to encourage folks to explore quite a bit. And this is particularly helpful if you own your own business. So if you are, you have a C corporation or an S corporation or an LLC or a limited partnership, this is something that you want to really become familiar with because it can serve you very well. So here we have Joe Jordan. He owns a successful real estate development business, and he's been passionate about spreading the gospel, so he has used his business to support. But lately he's thought, you know, I really want to do more. I want to be able to help the kingdom in greater ways. So when he learned about the Charitable Equity Partnership, this allowed him to release a portion of his business, accelerate tax deductions, increase his cash flow for reinvestment or personal uses, then also free up money for ministry. So how does that work? Well, as a business owner, what Joe decided to do was he donated a minority non-voting interest to the Great Commission Foundation Trust. When he did that, he received a tax deduction and the corresponding tax savings with that. Now, when that share is placed into the trust, it receives the portion of the profit of his business, and it's taxed, but it's taxed at no more of half of Joe's rate. So the net profit that's in the trust from those shares, and any future gain that the trust gets when those shares are eventually sold, and it will be when the business is sold, would go into a donor advice fund, and we learned how that worked in the previous illustration that Michael shared with us. And when it goes into the donor advice fund, then he can direct those monies to the ministry of his choice. So let's look at a flow chart to just kind of clarify how this one works again. So here we have Joe Jordan takes a portion of his business. We don't know what type of business it is, but he's chosen to transfer a certain percentage of that into the Great Commission Foundation Trust. When he does that, he gets a tax deduction, and there's corresponding tax savings that go with that. Now that trust holds that portion of his business, and obviously there's profit that he gets each year as the business is profitable. So that profit after tax gets transferred into the donor advice fund, and when that portion of the business gets sold in the future, when the business gets sold, then that gain goes into the donor advice fund as well. And then you can see that the nature of a donor advice fund is to advise as to how those dollars get directed towards ministry, and Joe can do that and see that they go to the ministries of his choice. So a great strategy if you own your own business, you're passionate about giving, and you're really eager to figure out how you might be able to do more to advance the kingdom. And on that note, I'll turn it back to Michael.
Thank you, Jay. I trust in these case studies which Jay shared and I did previously, it'll give you a flavor. When it comes to charitable giving, there's more than one way to skin the cat, as they say. And so these are just some examples of the ways one can do that with appreciated assets. You see on the screen there a very famous Greek chap by the name of Aristotle. He once said, "To give away money is an easy matter and in any man's power. But to decide to whom to give it, and how large, and when, and for what purpose, and how, is neither in every man's power nor an easy matter. Hence, it is that such excellence is rare, praiseworthy, and noble." And I like this quote because part of what Jay and I do is we sit down and we listen to people and say, okay, tell us what God's put in your heart. What do you want to do and why? And then we can show you how to do that through strategies such as we shared. So how can we help you? Going to the next slide. Our services are designed for you, our partners. This is our ministry to you. This is what we enjoy doing. We've had many years of experience in this field. And so, again, it's a ministry to you, our partners, our donors, to be of assistance to you. When we visit with people, your information is kept confidential, and there's never any cost or obligation. Jay and I, we don't sell securities, we don't sell insurance, we're advisors, we're salaried, so we take that out of the equation. And speaking of advisors, if you have trusted advisors like accountants, attorneys, we welcome the opportunity to work with them as well. I think a really important point is the last one here. Even though Wycliffe's on my shirt and I'm employed by them and Jay by Crusade, like you, we know people have multiple charitable interests. My wife and I support our church and Wycliffe and Crusade and many other ministries, and we know that's the same with most people. Our job's not to try to convince you to give to one particular ministry. Our job is to show you how you can be the best steward. And we want to leave it up to the Holy Spirit to direct you as to where you're going to give and what ministries you're going to support. Jay?
Is why include us on your team? And when I'm talking about team, I'm looking at the people that have surrounded you, professional advisors that you have brought to the table, who help you in the areas of your financial and charitable giving. Now, there's a scripture verse in Proverbs that says there's security in a multitude of counselors. And so we think it's very important that you have surrounded yourself with a variety of professionals in this area. But we want to be part of that team because we think we bring some unique expertise that can help you in understanding some of the charitable aspects of how you might utilize your resources well. So when you include us on your team, you'll experience no pressure, there's no cost, there's no fees, there's no hidden agenda. We're not about telling you where to give or how much, we're simply to help you learn how to give better. Now we're your friends, and we're a part of the ministries that you're involved with, so you know and you can trust us. Thirdly, we will make sure that you understand all of the options so that you are fully informed to make the choices that you think are best. And we encourage you, with whatever advice that we give you, to go to your other advisors and get their opinion to make sure that they think what we're suggesting makes sense. Lastly, and probably most importantly, is you will reap the benefits of being a wise steward of what God has entrusted to you. And as a Christian, we think that that's really important, that you understand that God holds us accountable to use the resources that He's given us to both honor and glorify Him.
Well, amen to that, Jay and Michael. Thank you so much for your insightful thoughts and your presentations. The graphics were excellent. Thank you, Lord, for fixing our audio issues and bringing us back online. Well, now it's our Q&A time, ladies and gentlemen. But first, I'd like to share with our audience, you guys, that as a representative of the Jesus Film to our donors, I have felt compelled to engage with the Great Commission Foundation regarding our gift in estate design. So Leslie, my bride, and I are right in the middle of our complimentary and confidential estate inventory with Jay. We are really looking forward to it, Jay, the advice that you will give to us so that we can leverage our position as stewards in the kingdom. You know, our estate is not large by any stretch of the imagination, but one thing I do know is that we are stewards over all of it, 100%. Like the woman with the 2 mites, she was steward over all of that. We're steward over everything. So thank you for offering that to us, the representatives of the Jesus Film. Also, having worked with donors for more than 18 years, I have literally seen firsthand tens of millions of dollars mobilized for kingdom building simply by introducing the donors I work with to my colleagues over at the Great Commission Foundation. I'm sure Michael has seen the same thing with your major donor reps out there. They simply introduce you and resources are mobilized for great kingdom work all over the world. So I'm so glad there are men and women like yourself who have God-given expertise and gift in estate design. I just hope that folks online today will see this as well, and they'll be able to employ the expertise of both of you guys. Well, in light of this still groggy economy, our new and improved tax rates, did I just say that? Combined with this presentation, I'm sure our audience has questions. Once again, ladies and gentlemen, use that chat feature at the bottom right corner of your screen to send your questions into our experts. So with no further delay, I've got our first question here, and it's coming to us. Oh, this is a good one. I like this. I don't know who wants to take this first question, but here it is. Question number 1. Is the IRA rollover giving option still available for 2014? 2014, is the IRA rollover available?
Well,
Guys?
I can tackle that, and Jay can tag on if I missed something. But right now, no. It's one of those tax deductions that's on again, off again, on again, off again. And frankly, Congress is not in session until after the November. I do know it was passed by the House several times, but kind of got stuck in the Senate. We're hoping that it'll be passed before the end of the year, but we don't know, and frankly, it doesn't give us much time to plan. So I guess the best words I can answer to that question is stay tuned, keep your fingers crossed.
Jay, you have anything to add to that?
I think he's spot on.
Spot on. Okay, so we just don't know. Don't know at this point. Just pray that this thing happens. We've seen all kinds of resources mobilized for great, great kingdom work as a result of this option in the past. So we hope it continues. All right, here's another question for us. Hey guys, here we go. I have already received and accepted an offer for the sale of some land I have been holding for several years, but I have not closed on the transaction. Can I transfer that land into a charitable remainder trust and reap the benefits that you described in your example?
I'm happy to take that one,
Okay.
Mark. The answer, unfortunately, would be no. If you've received an offer and accepted it, you wouldn't at that point be able to look at a charitable remainder trust as a recipient of that property. The IRS is pretty clear that they don't like to have it be a prearranged transaction. Now, if you have a buyer that's in the wings, or you've had some verbal conversation with some potential buyers, that's different. But if anything is at that point in the process where it's that certain, the IRS would probably disallow that, so you wouldn't want to do that.
Okay. Anything to add, Michael? He's got it. You guys are just boom getting these things done. That's great. Number two, or this is question number 3. I have some rental property that I'm considering gifting to ministry. How do I determine the market value of this property so that I can obtain the appropriate amount of donation for income tax purposes?
Well, I'll touch on that one. Because it's real estate, which is what's known as a hard-to-value asset, it's not like securities where you can look in the Wall Street Journal or online and get a quote. For hard-to-value assets such as real estate, the law requires that you get an appraisal. And it can't just be any old appraisal. It has to be done by an independent appraiser who's qualified to make appraisals on that particular class or type of asset. So there's several rules that the IRS has published as to what is a qualified appraiser. But bottom line, you have to get an appraisal, and that will set the value for tax deduction purposes. May not set the value of what you actually sell that asset for, but for tax deduction purposes, the appraisal is what you'll need to do. And not only that, both you and the appraiser will have to sign a form that's attached to your income tax return regarding that appraisal.
Gotcha.
I
Okay.
might add to that.
Mark, if I could.
Sure.
You may want to touch base with your CPA before you engage an appraiser, because the qualifications that they must meet from an education and experience perspective it's a fairly lengthy list of qualifications. And so your CPA can help you to make sure that you're choosing someone that meets the IRS guidelines so that you don't have any problems with that transaction.
Man, you know, the more I listen to you guys, the more I think, wow, do I really need a group of advisors to be the best steward that I can be in kingdom work. So I'm just really thankful for you guys. Okay, here's question number 4. You ready for this, guys? Here we are. Are there any minimum dollar amounts or ages that exist to set up a donor-advised fund? You keep talking about this donor-advised fund. Any dollar amounts or ages?
Well, let me take a stab at that, Mark.
Okay.
Michael can jump in. Speaking on behalf of the Great Commission Foundation, it's a pretty seamless transaction. We just require that the initial investment that's placed into a donor-advised fund when it's set up is $5,000, or that could be $5,000 worth of appreciated assets. And the other qualification that we have is, you know, we are a faith-based ministry, obviously, and we would want to make sure that 10% of what's placed into the donor-advised fund is used for any crew ministry, and the other 90% is used for organizations that would fit our value set. So those would be the two important criteria that we would have around a donor-advised fund.
Mm-hmm. Similar for
Essentially the same. Just a couple of quick other comments. When Jay mentioned value set, yeah, we'll make grants of our fund to other charities. They may not be Christian, but as long as they don't espouse anti-Christian values, anti-Christian mission, type objective stuff like that. I would also add that once you have a donor advised set up, they're pretty easy to set up. I know for both Crew and Wycliffe, it's a 2 or 3 page application. It's not complicated, and both of us have capabilities where you can actually go online and make grants, and it's all online. It's quite easy to do. So it's not a real serious thing.
Oh, okay.
Let me just jump in on one.
Yeah, sure.
But I really think it's important to mention, we at the Great Commission Foundation, I'm sure that the Wycliffe Foundation is passionate about this as well, but we think it's really important that folks are bringing their children into understanding how to do good giving.
Mm-hmm.
And so a donor advised fund is a great strategy if you're a younger couple that has children that are old enough to understand the discernment issues about how to give, is to have a donor advised fund, allow your children to participate in the recommendations that you make for charities, and so they learn how to do it. They begin to get a sense of your heart.
Mm-hmm.
And that's a great way to pass that value along to the next generation.
That's great. That's awesome. It sounds to me like, by the way, you guys just answered the next question that came in. It says, are you obligated to honor the charities identified by the donor? And you already answered that question, so thank you for your insight, and looking forward to questions. I love this donor advised gig. It feels like a family foundation almost. It's like you don't have to go out and spend thousands and thousands of dollars of creating your own foundation. You just create that within the ministry itself. And I didn't know you could go online and make your own grants. That makes it super simple. That's awesome. And then that point, Jay, about discipling your children in the grace of giving, that's awesome. That really is an awesome point. Thanks for pointing that out. Okay, let's see. I want to do the gift and sale, or the CRT and sale. How do I know what portion of the gift or transfer to transfer to the CRT and what portion to retain? Is that a Jay question?
We can both calculate. I'll do that one, Jay. Add on.
Okay, good.
I just did this in South Dakota.
Oh.
Well, it can be as simple as, let's plug in some initial numbers and get in the neighborhood based upon your tax brackets and the value of the asset and the cost base of the asset. A lot of stuff goes into the initial simple calculation that gets us what I call in the neighborhood, that gets us approximate values or allocations. But it's so important then to also involve a person's tax advisor or CPA, whoever that person may be, to actually run the numbers in the context of that particular donor / taxpayer's tax return. Mm-hmm. And just to see, okay, we got close, let's run the numbers, because there's lots of other factors that come into involved. What other income do they have, but what other deductions? But bottom line, we have software that gets us really close, and we work with the CPAs to refine that as much as we can to get as close as we can, if not to a zero tax result. Jay, what would you
I
add?
would just add to that, and again, great answer, Michael, to a good question, and that is that I was just working on one of these yesterday for a ministry partner, and one of the nuances that we discovered was it was important to think about what their state income tax rate was, and also their state capital gains tax rates. And although we work more at the federal level by bringing in their financial advisors who had access to that specific state situation for that person, we were able to fine-tune the answer as to what that split looked like. So as I like to say, it's as good as the information that we put into it. So the best information that we can provide allows us to give you the best recommendation.
Okay, guys, thanks so much. All right, we have time for one more question, and here it is. This is a wonderful question to end on. Thank you for whoever sent this in. Your examples have piqued an interest of my wife and I on a number of fronts. If I provide you information to our situation, can you prepare a written analysis that shows how these strategies would play out for us? Great
You want to
question.
take that?
Sure. I would just almost tag on to what Jay answered in the last question. Yes, we would need certain information to provide a good and accurate analysis for you. So we'd be happy to sit down and visit with you or talk on the phone, depending where you are, and get the information we need so that we can provide you with some good feedback, and that feedback can be an illustration, such as some of the ones we've shown you, or whatnot. But yeah, that's part of what we do. And again, just to repeat what Jay answered previously, the better information we have, the better information we can share with you and provide a good answer. Our job is to make sure that whatever strategy you choose makes sense and sense. What I mean that it makes sense, if you spell that S-E-N-S-E, and sense, C-E-N-T-S, for your situation. And so, yes.
Love the play on words there. Way to go, Michael. Well, Michael and Jay, thank you again for your presentation and the answers to these intriguing questions, actually. It's my understanding that our guests may contact either or both of you at any time to ask any questions directly by email or telephone. When it says any time, I'm sure you're not thinking 3 a.m. or something like that. Contact information should be on the screen there. Michael and Jay are ready to help you in any way, so you can consider your appreciated assets as a key to leveraging tax dollars for greater kingdom impact. As the title of this webinar suggests, remember, a video recording of this presentation as well as downloadable slides will be available for viewing again at the same web address beginning after Monday, October the 6th. Again, you can watch this again after October the 6th and download those slides if you want. Feel free to share this video with friends and family, and we're going to be back again, so stay in tune. If this web presentation has been of value to you in particular, please let us know. Use the email address there to let us know that it's been helpful for you. We use your input, your suggestions, so that we can become better and better at these presentations as we go along. We're planning another webinar next spring, just before Tax Day, just before April 15th, on a similar topic related to gift and estate design. So please, please, please stay tuned. And feedback, please. It's so helpful as we construct our next webinars. Thank you again for joining us today. God bless your day.